Hey everyone, and welcome to another episode on the John Wick channel. I know it's been a minute, but we are here today to do a March review on my 10K evaluation. And starting with the 12th, that is the day that we officially started this evaluation. So we'll begin there. And briefly, let me just go over the fact that over the course of this month, we took about 10 trades and we traded 7 days in total. Essentially a week out of this whole month we were trading, and you can see we weren't profitable. We only made $58.66 in the negative, so no profits at all. And let's dive into what the reasons were. Okay, we'll start with the 12th and we'll go through each trade briefly. So starting with the 12th, we had a losing day. You can see that we took a trade after the macro, which is not uncommon for us, but you can see here we have this random fair value gap that's marked out here. We weren't really paying attention to the structure, and it looked like we forced a buy instead of looking for sells on this day. Now, I think the problem here would be our analysis. Moving on. Second day, we kind of chopped around for a bit. We headed to the right direction, but price was not willing to go further, and so we ended up with a break-even trade. We weren't going to stay too long in a trade that wasn't moving our way. And so I am happy for the risk management. But overall, again, we weren't paying attention to the structure, and I think it was mainly due to the higher time frame structure that we weren't looking at. On the 20th, however, we had 2 break-even trades. I would say this was not my best day. As the title says, I was a bit emotional that day. I wasn't in the right headspace, and so I think that also reflected in my decision making. And so you can see we had 2 break-even buys, very small over there, but in the beginning we were expecting some huge retracement, which we didn't get, and I guess we tried to chase for that buy afterwards, which ended up with those 2 break-even trades. Sorry that I'm using this to scroll through the videos. Let's get to that right spot. Okay, we entered over there. It looked like a decent place to enter, but again, we were way after the macro when we were entering these trades. And yeah, I think these were just trying to catch the last bits of the ride, and we ended up breaking even at retracement points. You can see here we weren't willing to see price retrace any deeper, so those ended up with break-even trades. So moving on, this, as the title says, high resistance conditions. You can see later on in this chart that we do end up moving afterwards. Once I closed the charts, then price started moving, but understand that during the time I was trading, it was really high resistance. So in other words, price was really choppy and didn't want to move around much. And so you can see I took this trade. Now looking back, it looked unnecessary. It was an unnecessary trade. You can see that we marked out this random IFVG and price sweeping liquidity here. You can see price taps into that IFVG so many times, it's more likely that price will run through it when it does that. So you can see I was trying to force a trade that wasn't really there. So I take full responsibility for that loss. Understand my reasoning and my decision making was flawed on that day. And so looking on to the 25th of March, this was also a very bad trading day. Trying to see, why did I say choppy price action? But let's see, yeah, we had this first initial trade looking for a buy before the macro. I mentioned many times I should stop taking trades before the macro, because a lot of my losses came from trading way before or way after the macro, looking for setups that aren't really there, sometimes being too early, just not getting the timing right is also the issue. So that was my first loss. And then our break-even trade, we tried to go for another buy. And while price looked like it was moving in our direction, it wasn't the overall correct direction, because the higher time frame bias was bearish, right? So that was just a temporary move upwards, and then price stopped me out in a break even. Now I see what they mean by choppy conditions. Yes. Okay, so moving on to the next one. We had a bias that was incorrect this day. So we had one break-even trade, you can see here again before the macro, which I should stop doing. And then our second trade, we were clearly bullish, but our bias was incorrect. We were bearish this day, and you can see I took that loss right there as price was retracing slightly and then moving down. Yeah, that one was the loss. The other one was a break-even trade. Not the best of days. I think you can start to see a pattern here of why I've been losing. But this is one of the good days. On the 27th, we had a first loss right here, misjudging the direction and not paying attention to the overall bias once again. I think this is when I flipped my bias. I zoomed out and I saw, okay, my initial gut feeling of what was going to happen is actually happening. We're going to be bullish. It was a simple sell side to buy side setup, and we rode that price action all the way to the top, as you can see right there. And of course, happy for the price action, just not happy at the amount that I risked that day, or rather the amount that I was trading with. I was looking for a full profit amount, and yet I only got half of what I should have made. But that's okay. That was simple human error on my part. And then lastly, the 28th of March, we had no trades this day. I think price just ran over our heads. We couldn't get a read on price action, and so we kind of just let it run without us. So let me just conclude that overall for this month, I'm happy with the risk management side of things. I think we can all agree that we managed these trades well. Even though there are losses, there are break-evens, there isn't much profit, I think we handled it well. I think we stuck to our risk rules. Nothing went over $30, and I think for $58.66 as a loss for this past month is really not bad for a losing month. So I would say that's a silver lining, at least decent risk management. But again, focusing on higher time frame structure, on top-down analysis, and going back to the fundamentals on looking for your setup and timing the market properly. I think those are the main issues that need to be focused on for this next month. So guys, those videos you've seen me taking trades, like for example the trade on the 1st of April, just letting you know those trades are not taken on this account. I have mentioned that I was not going to be trading NFP week, probably not even the Friday, but I will try and paper trade, and if I do get any wins or whatever, I will post them just to show you guys, like, look, there was a setup today, but those will not count towards this account. So you'll know whether it's a paper trade or not, because I'll be trading live if we are actually using this account. So that concludes our video. Let me know in the comments if there's anything you think I missed, if you think I should improve. but I think I mainly covered the issues that were mainly obvious. But I think so far so good. We didn't do too bad, we didn't lose too much, and we stuck to the risk management, which is good. I think that this month that we're in now is going to be a very good month for price action. Fingers crossed. So wish me luck, guys. I'm wishing you guys also the best of luck for this month. Happy trading, and I'll see you guys in the next one. Cheers.